Ladies and gentlemen, welcome back to the channel. Today was really a so-so kind of day. Some stocks did okay, some stocks did not. A lot of stocks were in the red, including Tesla, at least at the time of recording this video. I am making this video a little bit earlier because it is my daughter's fourth birthday and about to take her to the water park, so it has to be done a little bit earlier. Nonetheless, we are getting some pretty good news today for Tesla stock that I want to share with you guys. Also from the Fed, some Fed officials made some comments that really stick out as exceptionally positive heading into Friday. Now, coming tomorrow morning even, we're going to have another big catalyst. And I'll just tell you up front, that is going to be Target earnings. Yes, in fact, if Target has good things to say, then the markets are really going to take that as good news. If Target has bad things to say about the consumer and bad numbers, well, that's going to be taken as, you guessed it, bad news. So we're going to get into all of this here in this video. There's some really strange things happening within the economy as well. I'll share with you some good news, but it just really confuses me even more. What I'm specifically referencing is the Port of Los Angeles and Long Beach, which accounts for 1/3 of all U.S. container imports, had their third strongest month ever in July, slightly below the all-time high in May of 2021. So let's get this straight. The economy is weakening. We may head into a recession, but we just had our almost best month of imports ever. Like this, we're talking 2021. Like the other 2 months that beat July was 2021. Like this was a dramatic uptick. I don't know if that's going to affect inventories, if that's just going to make inventories higher, or if we're actually starting to see a little bit of stronger demand coming in. It's just one of those things where if you were bearish, if you had a recession as your, base case, it just makes you wonder what the hell is going on in the economy. We also have some pretty good news for Tesla as well. Tesla China will unveil the all-Optimus bots, Cybertruck, and FSD at the 2024 World Robot Conference. This event will happen August 21st through August 25th. And financial media is reiterating some news yesterday from Piper Sandler analyst Alexander Potter that is recommending owning Tesla stock before the Robotaxi event on October 10th. The analyst said in a research note that aside from Tesla's vehicle deliveries and automotive gross margins, investors should also consider, great, don't you love when an ad pops up? Also consider the company's increasing profits from large stationary batteries and improvements in its full self-driving software. Article from Barron says Tesla dodged a bullet on EU tariffs. Why the stock is wobbling. Really going on to talk about the Trump taking away the $7,500 tax credit. We kind of already know this is not some big negative for Tesla. This is more negative for other car companies, and it's really going to make it harder for other car companies to compete. So yes, this news short term, not great for Tesla. It's not great for anyone, but really in the longer term longevity of Tesla, it's not a big deal. And as per Jefferies, the China robotaxi market could pass $60 trillion in 2030. Question is, what percentage of that market will Tesla have? Now, some comments from Fed Bowman. Fed Bowman says, I have seen some recent further progress on lowering inflation, but inflation is still uncomfortably above the committee's 2% goal. Now, you would think, why is this positive for markets? Well, right now, the focus really isn't about inflation. It's really not about the Fed in the larger term sense. It's about the economy. And really, if you're an equity investor, the only thing that matters is the economy right now. It doesn't matter if the Fed doesn't cut, if they cut once, they cut twice, 3 times, 4 times, 5 times this year. It does not matter. It's the reason for the cut it's all about how good the economy is. Like theoretically, the best case scenario for markets would be like 1 cut this year. We're pricing in close to 4 for this year. Okay, 1 cut would be the best outcome for Tesla and for markets, because that means the economy is doing well. The economy is not needing rate cuts. Unfortunately, the economy does need rate cuts, and there is enough weakness out there to justify rate cuts. The problem becomes if we start to get too much weakness, this starts to lead to more recession concerns. So you really just want to see strong data right now. And if the Fed is saying, hey, we're still kind of worried about inflation, we're not all done with inflation, you know, the economy is doing okay, that's actually good news. Fed Bowman also says, I will remain cautious in my approach to any change in the policy stance. Fed Bowman says, while the unemployment rate is up, it is still historically low. Fed Bowman says, should incoming data show inflation is moving substantially towards the target, it will become appropriate to gradually lower rates to prevent becoming overly restrictive. You can make the argument today the Fed is already overly restrictive by any measure that you want to evaluate. Inflation on a year-over-year basis is almost down to the Fed's target at this point. Like, they are overly restrictive. So some of these comments are not as good. Some of these comments show a lack of maybe competency to some extent, because I mean, you're already overly restrictive. Fed Bowman also says we need to be patient and avoid undermining continued progress on lowering inflation by overreacting to any single data point. And again, this is kind of reassuring to markets that the economy is at least doing okay, because if Fed Bowman's not super worried about needing to accommodate things right away, then, I mean, that's got to be a good sign for the economy, right? Fed Bowman also says the labor market continues to loosen and come into better balance. He says, I still see upside risks to inflation, which basically means upside chance that the economy actually gets stronger from here, because inflation and economic activity go hand in hand. If you have high inflation, you have good economic activity every single time. And last but not least, she also says we must view the totality of data as risks to employment, and the price stability mandates move into better balance. Bespoke says it only took the SPX 14 days to rebound from its first extreme oversold reading back into overbought territory yesterday. The market may usually take the stairs up and the elevator down, but in this case, it took the elevator both ways. Brian Dietrich writes, another Zweig breath thrust triggered yesterday. Although we are seeing more in recent years than in the past, still worth noting stocks have never been lower a year after a signal, and up 23% on average. And more specific good news for Tesla, the transportation and logistics company NFI says they have piloted Tesla's semi-truck in recent weeks. Quote, our team delivered goods on routes between 250 to 450 miles supported by fast charging infrastructure. Over 6,000 miles, the semi demonstrated an efficiency of 1.64 kilowatt hours per mile, with 60% of those miles covered at speeds of 50 miles per hour or greater, enabling us to evaluate more sustainable solutions for our customers. And overall, it looks like Tesla stock is going to comfortably close above $220 per share, which does set us up for potentially much larger upside in subsequent weeks. Now, it really comes down to target earnings tomorrow. It comes down to Thursday's economic data, and it comes down to Friday's speech with Fed Jerome Powell. But as long as we don't get any really bad numbers or bad surprises, nothing worse than what we have seen so far, which I don't think we will, then you're probably going to see the markets do pretty well this week. You can make an argument the markets have already done pretty well heading into these events, so perhaps you could see a little bit of selling on the backside once these events are over with, but I'm not expecting anything dramatic to the downside at this point until we get data that just looks worse than what we've seen in the past. The markets, they're exceptionally good at shrugging off bad news as long as it's not getting worse and worse and worse. The last thing you want to see is like retail sales come in 0%. Next month come in at -1%. Next month, come in at -1.3%. Next month, come in at -2%, right? You don't want to see it get worse, but even with, let's say retail sales for the same example, if it comes in at 0% and then it comes in at -1% and then it comes in at +0.2%, then it comes in at negative, 0.5%, right? As long as it's not getting worse, and we're not seeing worse and worse and worse and worse data, then markets can generally shrug off some weakness. It's more about the trajectory and the velocity of the direction, okay? And I'm not certain that the velocity is going to be to the downside for the economy at this point. It could take a little bit more time. I think eventually the velocity will tilt more to the downside, and that's when the Fed will react more aggressively. And then at that point, it's just going to be a balance between, are we going into a recession? Did the Fed do enough? How much are they going to do? And what ultimately does the data look like? I'm actually pretty dang constructive on Tesla stock here in the near term. I think between now and potentially October 10th, we could see quite a rally for Tesla. I think markets are pretty overextended here if you look at the SPY, but I do think there's a lot of room for small caps, cyclical value, high-paying dividend stocks to really outperform here. Interest rate sensitive companies of quality can really start to outperform. Tesla Tracker on X says it's been a while. Here's the big picture once again for Tesla. And after breaking the 220 level, you could see prices as high as $500 for Tesla stock, even by June of 2025. Yes, you would need to see inflation continue to fall. You would need to see the Fed starting to pretty aggressively cut rates at the same time the economy, stabilizes, but in all reality probably improves alongside a good robotaxi event on October 10th. No bad news of any significance between now and then. I will say though, it's possible we could get some kind of outcome like that. Is that a logical base case assumption? Probably not. You shouldn't YOLO all of your money expecting Tesla stock to be $500 by, summer of 2025. But there is a chance that could happen. Probably a 30-40% chance that could happen. Not enough to be super confident in, but not enough to discount that too much either. I do think a lot of the gains for Tesla stock will come in the back half of 2025, especially as we really get closer to launching the robotaxi network. So let me know what you think about all of this information down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. You guys have a great rest of your day, and I will see you in the next one.